Hello traders, Jeff with OptionBoxer.com. I want to talk to you today just briefly about how to make an adjustment to an options trade that may not be working out quite the way you had hoped. Before I do though, please know I'm not a registered financial advisor, and this video and any of the contents within are not a recommendation for you to buy or sell any security or place any trade. Please make sure you read the disclaimer on your screen and understand it so that you know the risks of trading. All right, so that being said, what I've got here is this is an option trade that I'm in, and you can see this little, it's kind of small, this little tan brown hash mark there is where my position is at today, and you can see I'm down $24, so nothing catastrophic, but still I'm down $24 on a trade that cost me $53, as you can see here in this blue number. Cost me $53 to place this trade. It's a vertical. You can see it's a vertical put spread on Apple. Some of you may be thinking, why on earth would you trade to the downside on Apple? I just felt like they had some weakness, had a little bit of negative news come out about a couple of their, I guess, creative design higher ups, for lack of a better word, had moved on and I guess taken positions elsewhere. And so it had a little bit of negative news, and I just felt like maybe they were due for a little bit of a pullback. We can look at the chart and you can see kind of where I set my entry. I entered the trade right around, I'll tell you exactly, I entered the trade on this day here, I believe, or I'm sorry, this day here, if I'm not mistaken. And you can see it's gone against me quite a bit. I've been in it now for a number of days, and it peaked out. It just barely, I think, breached my stop. But I don't do stop loss. I don't put stop loss orders on the books. I just do manual stop losses, and so I didn't log in and initiate a closing trade because it looked like this day it looked like it had a little bit of weakness, and in fact it did pull back. Excuse me, pull back a little bit. So I didn't enter the closing trade and accept my losses and move on just yet. But to me, it kind of looks like it's setting up a little bit of a flag pattern. It may pull back one more day before continuing higher. At least that's my assumption at this moment. So just to kind of show you what I've done here. So if you're looking at this trade right now, you can see I've got the adjustment that I want to make. I've got it sitting there. If you look at this trade right now, with the slice here is what they're called, this price slice set at the break-even point, I've got a 9% chance of this trade finishing somewhere over here where I would need it to for me to break even. Well, of course, I don't want to break even. I want it to actually finish lower than that so that I can make the full profit, or at least some amount of profit. So with 9% chance, that's almost a certainty that that's not going to happen. So you have to start thinking about, well, what can you do? Well, you know, options give you just that. They give you plenty of options. So I could roll this trade out to July from June, give me another 30 days for possibly this to work in my favor. It would cost me a little bit, and I would have to accept my current loss of, you know, $25, $24.76. It's actually 25. But, you know, I would have to accept that loss and then hope that it would, you know, make it back up if Apple's price did fall. But regardless, that's a long way for it to fall in a relatively short period of time. So my thoughts were, okay, well, it looks like it's a little bit bullish here, or it's a little bit bearish in the last couple of days, but you can see it tried to go lower and then it pulled back up. So it looks like maybe there's some more bullish behavior kind of materializing here. It may base out for a little bit, kind of like it did at this point before continuing higher. But regardless, I've got a trade set up for June 21st, which at the moment is about 50 something days until expiration. So I thought, well, you know, it only cost me $30 to buy this out of the money call option. So why not set that up and possibly give myself a chance to profit. So with that included into this, trade, kind of lumping all these into one, trade, not just looking at them individually, you can see that in order for me to break even now, I really only need the stock price to go up to 208. So 208, it's currently sitting at 204.30. So 208 is not a huge move for a stock like Apple. So it's currently sitting right around there. I need it to go back up to basically my stop loss point, and I would break even. So if that is in fact the case, I would probably let it go to that break even, and I may honestly close the entire trade depending on what price does in the next couple of days, but it would get me back to zero, and I would have neither made or lost any money on this trade. So that's kind of the adjustment I'm thinking of at this moment, and you can see it just doesn't have that far to go. I've got about a 40% chance that it moves from, I've got a 7% chance that it moves all the way to my break even of 240, but I only need it to move to about 208. So you can see it gives me about a 41% chance that this will move in my favor. So 41% chance is a lot, for $30 is, it buys me pretty much a 30% chance if you factor in the 9% that I had a while ago. And maybe that math is just my own idiocracy, but regardless, it gives me a better chance to break even and possibly even make some profit. You can see if it goes to 208, you can see right there I would be at a $30 profit. That would basically cover my $26 that I'm down at the moment. Anything past that would be strictly profit. If it does make a huge move, you can see not that long ago Apple topped out up here around 233. Right now it's at 204. I mean, it's not unheard of to think that Apple may test kind of this area here where it was range bound there for a while. So it's certainly possible that they're going to raise up to around 217, 220. And if it does do that, then my option could be worth quite a bit. If we move this out, let's say a week, and it goes to 208, I wouldn't quite cover my loss. If it goes for a week, I would need it to bump up to about 210 to cover my loss. But still, that's not a huge move for a stock like Apple, who can move. If you'll look at this up here at this where it says R, that'll tell you the daily range. So just as I hover over some of these, you can see $8 that day, $2, $1.50, $3.30, $3.41. So you can see on a stock that moves $3 or $4 sometimes in a day, expecting it to move, $6 or possibly more in a week is not unheard of. So the odds become drastically better by placing this call trade, and it's a small price to pay to possibly overcome my current loss. Which, in any case, that's just a quick little adjustment I'm making on a trade that's not going in my favor. If you have any questions, please feel free to reach me at optionboxer.com. Thank you for watching.